All right, everybody, let's get it kicked off. 2023. Welcome back. Starting for a new year. Really great to have everybody back here. And welcome. Shout out everybody to the chat. Let's get right to it. Part of the new lineup. So Tuesday, Thursday, new schedule. But part of what we're going to do is going to be add in some 5-minute stuff. Okay, we've got a 5-minute situation right now with S&P 500, huge deep crap. This is exactly the kind of thing I want to be doing with the new year. So this is something I'm looking at right now as a long opportunity for the day. Hop at 2270. But this is exactly what I want to do. And I think on Tuesday, Thursday, taking like, 90 minutes or so, we still get the same amount of time, but we can do more. And all of the big stuff that we do, the patterns, crypto, major markets, is great for the overhaul, for the overview. But stuff like what we're looking at right now, which is beautiful, it's actually a type 2 deep crab, I'll get into it in a second, is exactly the thing that we really all should be focusing on ultimately with what we can do with our time. 5-minute opportunity. This thing just completed and you're, looking at a possible major intraday reversal. Something where click the button a couple times down here with a few contracts makes sense. So that's kind of what I want to be doing more of, and then bring in stocks, 5-minute option plays for the day, single day options, weekly options, as a part of everything we do for this year. So that's, I like to make a couple of adjustments every year. I think this is going to be a good one and be a really effective use for our time, and especially those people that also can't be here in person but are watching the recordings, learning. We can get a heck of a lot more. This is a perfect type 2 right here, S&P 500 to start the year. Hop level at 2270, it hit exactly 23. And we're now 3-bar breakout, all the things you want to see at a major reversal point inside of a pattern. Not to mention, it's a type 2 because there's terminal bar right there and an exact type 1, now exact type 2. I mean, this is why folks get the software. So here's my initial pitch. This is what we're doing and what I want to do more with the sessions, but everyone really needs to have Harmonic Pattern Collection software and get with the website and Discord groups. That's what we'll be doing even more of. Some of the members sessions that we'll be doing on Discord coming up starting next week. All of that you got to connect here. Go to harmonictrader.com, become a basic member right there. Of course, you all know that. And then hit the basic members page. And what I'm working on and what I'm going to recommend, especially people that are doing futures or want to join in on options, I'm going to recommend the secondary platforms, one of the pro platforms, MetaTrader, eSignal, Ninja, and these are all free trials. So leave it up to you guys to take advantage of that. We also have a free trial with our Thinkorswim add-on. Take a look at that. Okay, and of course, TradingView. Everyone should have the TradingView program because we'll work on both of those. I want to do SPY and I want to do futures. This is futures. I work on eSignal. I've subscribed to this program for almost 25 years. Continuously, I believe in the product and the best data. And this is what I use for futures. The SPY stuff, go with TradingView here, stuff like that. And run 5-minute SPY scans. Here we go. There's SPY. Go to the 5-minute. All right. Does that link up? Anything we have right here on SPY? Check it out. I mean, it has been an amazing couple of patterns. We had this early shark pattern that sold off. That was what capped this morning, but we're now down at target 2 at 379 and change. That's a huge number for SPY intraday, and I'd be watching that immediately. Needs to hold that 379 level for today, or the whole thing will fall apart. I mean, that was an amazing reversal this morning on the open, but not surprised. We'll also get into, in a little bit, everybody, what the heck's going on with Solana. I know I don't want to spend too much time on crypto, but hey, okay, I'll give it this. I'll take a look. Daily deep crab. It's looked ugly, but last week this little HSI snuck up on us, and I still think hop level at $2, 238 is possible. All right, so really not much. A lot of people are making a huge amount out of this. It did go from 8 to 13. But that's also after it went from 150 to 8. So that's what we're going to be doing more of. I do want to also kind of give you guys a quick picture on NASDAQ 5-minute futures. And take a look. We've had some great 5-minute patterns right at the open, right at the hop level. We had the massive shake in this morning off the Gartley, and then it just completely tanked. Now we're down here at the total 314. I mean, that's amazing. The 314 extension off of the pattern at around 10,860. That should be the low for this morning. If this is going to be just like a massive 314 dump, that's got to hold. I think we're hitting the limits of what this massive reaction could be for now. Look at S&P. Yep. Again, perfect pattern here. So great way to start the year. This is exactly the kind of thing I want to be doing. For everybody that attended our seminar, the things that I want to highlight with this 3-bar breakout is simply the continuation. This is a technique we talked about. Hold on one second. There you go. We talked about in our seminar, and now we just need to see continuation where, listen, we're looking for target 1 at 38.60. That's 30 points from where you are. That's a massive move. But the way it's got to get there, okay, is not take out single bar lows. I mean, right now your single bar low at 38.29 will be established in about 2 minutes. But this is climbing out of that hole. I kind of like it. Click, click. You know what I'm saying? Let's keep an eye on that. No HSI though. I mean, that's the only thing about this, that HSI came in all the way back here. Somewhat in the zone. I wish we had an HSI down here, but nominal reaction possible out of the zone. It's just it got slammed this morning. Even a dead cat bounce should take that a little bit higher. Okay. What's up, chat? What's going on? Hey, everybody that won on Thursday, listen, I just want to let you know that you have to connect with Miss Stephanie, and I'm even going to streamline that process so it's even easier on the books and the gold memberships, but just want to let everybody know, if you have not done that, please do so. Beyond that, again, Thursday will still be our giveaway Thursday sessions. Definitely. Let's go over really quick to a couple of the longer term time frames on S&P and NASDAQ and the Dow, because this is, look, first session of the year. It's really concrete between the levels of where we are. We're stuck in this consolidation zone on S&P. What is it, and what happened really towards the end of the year was just a type 2 off of the bat pattern. Take a look. So what's going to happen with S&P? Where's the market going? I say under this 38.33 issue, at that support level, if we fail, and let's say we do 2 or 3 days down under 3,800 and close under these lows, then it begins like this. And we go back to the lows. And today doing an ugly bar does not help. The thing that happened at the end of the year was a retest, a kind of a tertiary retest of that pattern. We've said we've been stuck between 38.33, 41.40 on S&P futures. Now, okay, it's time. Are we going to take out these prior lows from October, June, do a deeper retest, maybe 3,700 or 3,600, some kind of secondary third retest? Certainly, you're not starting the year off well. You didn't end it well, and you really, we can go off the last couple of HSI signals to really understand what the limits are. We had this big shake-in up to 4,100, but check it out. At 4,000 was our last bearish HSI signal. And then big sell-off right down into a bullish zone. So 38.50 is your trigger point, and you're not really holding it, not in the way you would expect HSI to react and respond. I mean, it's really interesting because you see how you check back 1, 2, second bearish candle, you continue lower. Now you're hitting congestion here around, again, 38.30 is the number. 38.30 is a huge, 38.33 to be exact. You fail this low, you go underneath here. There is nothing there. That's the problem with it. It might take time, but it's all about this bearish bat pattern. So I want everybody to know there's plenty of time, because if this larger flush is going to happen, okay, the breakdown and the follow through, you're talking about something that's going to take a lot longer, will take months to really follow through on. But you're not, I mean, look at the last couple of weeks. Just remove, where are we going? There you go. Remove all the drawing tools. So these are just, last 4 or 5 weeks have been ugly candles across the board. You just need one continuation lower, a close under 3,800, then you have nothing. And I've been trying to really nail this down to where are the exact breakdown points. And the prior lows are obvious, but there's nothing there until you retest some prior readings. This kind of bunching up, take a look. We've seen this before, just back in August. You know, kind of remind me of that. Even this kind of breakdown where you need to come back and retest. So give it more time. Also, listen, this is the easiest way to know where we are within the last 15 months. Okay? So just draw the obvious trend line and then stretch it out. TradingView's got a great tool for this, where you can count the days. I mean, we can just run the arrow until you break free of this downtrend. Okay, that's still the majority direction. 3,600, 38, and then 36. But today, you know, we fail this. And I mean, it's like right now. You're fighting it right now at 38.29. There you go. You have a couple of 4-hour patterns as well that completed really early December that have targets down here at 38.50 and 38.20. But that's it. If you want to know where this thing breaks free and goes into a free fall back down to the lows, like I said, it's under 3,800. If that happens today, let's say we have a nasty afternoon, so be it. This 5-minute pattern, this is going to be the one that fails if it does. We don't have any confirmation yet, but oh wait, here you go. 1 second. Hold on. There you go. Okay, this 5-minute pattern for today and where we are, essentially, that has to be the low. You violate that pattern, you violate this support, then the larger time frame kicks over, just kicks in, and this probably becomes an out on flush. You're talking, you know, flush it for the week, but it's under this pattern failure. It's not, it's really, you know, what's been happening up at these prior resistance points. Here's the NASDAQ, you know, a lot of nasty 5-minute patterns like this Gartley. You've had a few in the last week alone. And a little ABCD, a lot of great type 1s, but there's the other one just back from the 28th, you know, another bat pattern, retracement pattern, overshot the hop level, but that was it. And they keep happening at slightly lower levels, you know. I mean, look, check it out. 5-minute deep crab right there at 11,182, and then 10,960, and now up here at 11,130. So just nasty bearish patterns continue to trigger much larger moves than any bullish formation on a 5-minute. And you guys know I like the 5-minute. I like to look at the 5-minute. We have it right now. So listen, we've hit an intraday structural extreme. Basically this 314 extension of that pattern. That's what that is. But more importantly is we have finally have a bullish HSI down here and check back. So I would still need to see 2 bullish candles. Okay, here's a great example. This one happened this morning. Check back, 1 bullish candle, but the second one didn't even happen until all the way down there. It was a dud. So that's what I'm looking at here. That's on NASDAQ. Just be patient on that. If that's going to be anything, at least if this market's going to turn around at all, or if this is going to be a straight out dump, you'll know right here. So let's, the same with S&P. 22 at the hop level. Yeah, you're looks like you're going to come back down. Couldn't get that zero continuation. So check this out. We were just talking about this when we started the session, and it rolled over. It failed the 1 bar continuation. So remember this. And I just said, look, remember, if we get a 3 bar breakout, it has to continue. It has to come out of the zone like that, or your stops are bumped. And so, 38.30. What's that low right there? 38.29 and a quarter. Yeah, and now here you go. And you're failing back down. Same there. I mean, if you didn't do it that first one, the obvious trigger bar, but this looks like it's going to flush. So acting pretty ugly even on a small 5-minute intraday time frame at these critical zones. Yeah, I mean, hey, Darren's saying 338. Sure. Look, the big. I want to take this in chunks, but right now, first session of the year, look, they want to smack it and they want to break this trend. They want to break this. The only possible bullish scenario you have is here off the check back, and it looks like that. And hey, if you want to go now and say short this because it's going to break down immediately, maybe. I just think the acceleration comes underneath, probably after today, and it closed under 3,800. Your 5-minute time frame where you're trying to do a type 1 here, look, no confirmation, and you're at a target 1. You're at the hop. All right, you just hit the hop, 38.22. Okay, so we're talking about 2 seconds ago. You're still looking for a type 1 reaction there. No HSI though. Has not been. This is a type 2. So no HSI, that's a problem. And your 3 bar breakout failed to even get out of the zone. So I can be patient on this retest. You just hit the hop level. If that's what you're, looking at off of a secondary opportunity, that has to be the low. 38.20. All stops underneath there. So I'll wait. I'll come back to that. It looks like trying to bounce off of that level, but again, this is big stuff because you're dealing with daily, you're dealing with potential 4-hour levels here. 38.20, that was target 1 off the bigger crab that finally got hit. Interesting, coming back down there. And again, look at the total range from the October low on your 4-hour chart. Looks like this. We've already retraced 50% of the October rally. So what's going to happen here? If this is our B point, treat this whole correction right here as a potential B point, which it probably is. Then, is it something like this? And then down one more leg back to the 886, 35.72. The whole BAM phenomenon, folks, bad action magnet move, where you bust the 50 level and go back to the 886 is what you're threatening here. And you're starting off the year in an ugly situation. Again, we can just look at the last 2 weeks of December. Okay, you could not get above any prior high within that consolidation range. Listen, that consolidation range breaks down, closes under those lows, it's done. That's why it's so critical. And that 5 minute that we're looking at right now is it. I mean, this is for the day, and it's probably your the only opportunity for the day that hop level has to hold. 2270 right now. Come back to this. Really quick, want to look at some big stocks. Tesla. Okay, bad time to come out with weaker than expected earnings. What is it? Well, your new lows for the move. Okay, weekly hop on. Let me go to the other platform. Let me go to TradingView because I don't want to confuse people. But let's go to TradingView. All right. Let's go to Tesla. 106. Boy, that's hop level on the weekly is 113. Okay. Where's HSI here? Finally hitting for the week. So quite early, folks. HSI is going to trigger this week and likely come out next week. But what does that mean for this week? It means you're going to hit, you're still down. And I think you're going to be down, stay under that 113 level to register the signal now. And where's let me see here. 1 second. HSI is at, where'd that go? About 9. About 9. Look, just because it's 106, it's overshooting the hop. The fact that it's hitting right here, right now, is at least a heck of a lot better spot than some of these other ones. But I'll keep my eye on it. The other thing to watch with Tesla, your daily, your weekly, is the fact that amplified RSI is still in the oversold zone. So that's deep. And that will take more time. But come on. Really? You know, I mean, I would love to see them wash this out more so. Some people say Tesla's going to $40. And the only thing there is, all-time 886. So, but look at the monthly HSI on Tesla. Deep oversold. So that needs to do something rather significant before it ends this drop. And on a monthly chart, listen, it's either here at 113 or, yeah, it's a full, we could do a connect the dots shark, if you will. Looks like that, and then this just becomes a massive 1618 down. Yeah, look, $40. So it's either 113 or it's 40, folks. What's the chat say? Chat says 65 since 25. $40. I really want to be careful with what's happening like immediately right now. Because if this gets dumped, I mean, if this market gets dumped this week, you'll know by tomorrow. I mean, we'll know. And I do think if this is going to be ugly, we're right now S&P's trading 3827. I say we close under 3800 today. We do something like that in the next 3 or 4 hours. This is going to be an ugly week. Yeah, 40. 40 is an all-time crab. He's saying it looks like a deep crab. 40 by August. Could be, connect the dots. There's your weekly pattern, though. There's the weekly Gartley. Okay, crazy hop level, 113. It bounced for a day. So what? No confirmation yet. But this is what that Gartley is all about. I mentioned this probably a week ago. Really what this Gartley is about is just simply the A to B, the C to D, all of that around 188. And that should be a continuation pattern. And what's it doing? It's failing. So that's some of the structural issues with this. If it was a Gartley at the hop, you would want to see this thing hit the hop and reverse. That's not what's happening. And there's no, now you're oversold. I mean, actually now you're hitting oversold levels on HSI with amplified in there, but you're probably early. Not worth it to catch that knife until you turn around. Look, Tesla's going to be a buy at some point. Tesla will be a buy at some point, but again, like all of these, where can the market make it a buy? Like at what point will the market just say enough's enough? We're going to throw it all away. I mean, this is now. How do you feel about this on a quarterly chart for Tesla? Looks like all the rest. Bitcoin, Ethereum, all go to what? An all-time 886. That's around 47 bucks, and then do a 382 move back to 200. Very well could happen. But in the meantime, we are not all the way done that massive the backside of this distribution curve. That's all that is. It's the end of the 10-year cycle. The question is, where is the end there? Is it right here at 113 where we have some stuff? You're also, take a look, retesting, taking out the prior month's low. Okay, I don't, that's at 108 and a quarter. If this is a shakeout, you're not going to spend much time under 108. This is why we want to pay close attention to what's happening. I mean, literally today, tomorrow. Don't go anywhere, folks. Don't go anywhere. If, you want to see what's going to happen early this year. You want to be around today, tomorrow, into Friday. There's Tesla on a 4-hour chart, and just great pattern even on a 4-hour. But where's the confirmation? Nowhere. Finally down there at around 109, and then it just runs into another bearish HSI. This is the last week of the year. You had a 4-hour bounce. They sell it right back down. S&P trying to bounce. That's right, Laser D. S&P trying to pop here a little bit. Right off the hop at 2270. Where's confirmation? Nothing there. I mean, that's the only problem with it, but you're plus 12 off the hop. Just think reaction, folks. If at all, if anything down here. But 2270, and that's the low. I just said that. That has to be the low for the day. If you're going to get a catastrophe, you're going to sell under the hop a little bit later, maybe before we leave today. But this is still type 1 behavior. Let me look at the 30-second. I like to look at the 30-second chart with the 5-minute chart. What do we got? I mean, geez, there's the hop level. It didn't spend more than seconds down there. There's the hop. Amazing. And now you're plus 12. Not bad for a little reaction trade. I'll come back to that 30-second chart. Look, a couple of the other big ones that are the obvious, they're going to move the indices that have to pay attention to. Microsoft. And you know the deal on Microsoft. Okay, we're ABCD. There's some weekly patterns down here. I tried to pop it early, but this is still a type 2 under 235. You close the gap, you do a 220 retest. And again, if you're not in your strongest of individual stocks, a lot of them, like the techs, the FANGs, they could come down for a secondary test early, sell off the rest of, the rest of that was being sold the end of December. You sell it off, you retest these zones, give us a confirmation maybe in 2 or 3 weeks, and then go. That's a very likely scenario. You have a bullish HSI on the 1 hour, do you? Did that just trigger? I'll look at that in a second on S&P. But larger scale, that's really kind of shaping up where the best alternative for the longs is still a retest lower. Apple, same deal. But look what Apple's doing. And we said under 122 with Apple, that's a problem. Take a look at the bat pattern. Let me clean up this chart. And this is new lows for this move. Okay, we've already been talking about possible hop levels since really that first reaction trade. And then as this thing started rolling over in November into December, it became pretty clear this was a sloping lower to retest a minimum 134.41, but now I think they want the hop level. And here's the deal with Apple. Last week, actually, was it Thursday? Yeah. So a week ago, we had the first confirmation retest under 134, like 132. But where are the first two bullish candles after that fact to show us something? 1, 2. There's your second green candle, really. But no breakout, no turnaround. Still on this downtrend actually, where you're going to flirt with the hop. Probably need another retest because look what's happening with amplified back into the zone. So you're sitting on the sides looking at 122.40, but I mentioned this as well last week that again, why so significant with Apple? And the fact that you're starting out the year basically continuing what is to be a real nasty breakdown here of the obvious support. Looks like that. And there you go. Get some perspective here that this is a long-term break. There's COVID. That's the COVID low. Yeah, we did talk about this last week. That this break is critical. And I think, a close under 122. This is the same with Tesla, same with a lot of these that have already kind of broken down, is that there's nothing underneath here. So here we go to the leaders ready to do big COVID breakdowns. Finally do their B point breakdown, your BAM breakdown, and then you go to the 886. Is it really? That would be 65 on Apple. That's what's at stake because your B point lines up. We've seen this. So, look, we saw this with Meta. We saw this with Netflix, Google, Amazon. They set up these long distributions, very, very much like this, and they tried to pull off an ABCD off the top, and it failed. Tesla did that. And the only thing left underneath that failed ABCD is an 886. And like all of them, Bitcoin and the rest, we can all say it started with the COVID low and will end with some kind of major retest of the COVID low. And we're really the first step in a breakdown, in a BAM breakdown, bad action magnet move, where you just piercing it now on Apple. Looks like that. So we'll say if we officially close any day under 122 this week, again, this sets up for an ugly first week. Maybe even into the end of the month straight off, but kind of a flush that just continues the last 2 weeks of December. One or two more. Apple, Meta, okay. That's held up a little bit better, and it's sitting on this big hop level of a deep crab pattern. That's weekly. Not bad. But there is something here on the daily I'm watching. Doing a crazy check back of some daily HSI signals, all at about 121. You know, that one and that one. And even if, listen, even if I'm wrong on this, let's say this is not congestion. This is actually going to try to break out above that crab. There's plenty of time on this. Plenty. Okay, if this is going to hold and break out, let it do a 3-bar breakout. Because the minimum retest, above 130 shoots you back into the zone, back to 172 to 192 or 195. But not yet. Not yet. I would prefer to get a retest of 116 on Meta, especially with the rest of these rolling over. Here you go. S&P rolling over again. You're back down at 38.25. Remember, go under 22 for the day. You got issues. You got issues. I mean, you got big issues. Look at that, 106 on Tesla. Jeez. There you go. Here's 5-minute futures. Let's just post that chart. There you go. Right back down. There you go. 22. And remember, this should be doing things after it hits the hop level, some kind of early manifestation of a turnaround. There should be continuation. Otherwise, that's where immediate trade management objectives get put in. Bumping stops, 1-bar stop losses, all of that. Is there another opportunity here today at 2270? Not really. Not with the lack of HSI to come down like that. It's tough because it's a great pattern. You want confirmation. You got to be patient. You're really not ready to be taken advantage of. Be patient. Let's get to a couple others before I clear out of here. I want to show, look, Google. Come on, Google. Should be Google L. Weekly, daily. Hold on. It was daily for Google. And it should be on the other platform anyway. It's a deep crab. Now, Google is an example of why I want to be selective in this environment. It's almost a perfect type 2 on the daily. And this is worth a serious look, but again, needs to hold these lows. It did not get to target 1 at 103.88, fell just shy, 102.50. So really, this is still like a delayed type 1, target 1, where you're 89, you're looking for 103.88. Still looking for that. But here's the interesting thing that happened right at the last week of the year on Google. Check it out. You have HSI back in the zone, so it gives you a secondary shot. You do check back the next day, and 1 and 2. Okay. First green candle after the retest here. Second green candle, great, and then breakout today. Now, you need to close above these highs. You need to be above 89.30, 89.20 for this to do anything. All right, but at least you're there, and today's literally the first day to seriously be looking at this opportunity. Some of the ones that we were looking at into the end of the year never set up. You had checkbacks, but they just kept on going straight down. Others took more time. So keep an eye on that. Yeah, we're failing now. There you go. Goodbye. Goodbye. Again, under 38.22, folks. There's nothing. 3,800 for the day. For the day. That's just as weak and shows you why. There you go. Take a look at S&P. It's going to be nasty. Hold on. I really back and forth on this for a while. Again, there's your flush. You fail the deep crab, and you have no confirmation. Look, this is why when you're in a zone, especially on a retest, and your HSI is in the middle, or you're trending lower and you haven't registered anything, that means it has more work to do. And that's the kind of the path it needs to take. So you're down here, you've on a type 2 and you failed. I expect this to even go serial, meaning it already started it actually, but you should see this thing break down bar over bar. Use the prior 5-minute peak, wait for the close in about 90 seconds, but you should see this thing ditch down, about 3,800 being the target for today. Yeah, bar over bar, Evan. That's right. Hey, that first opportunity was not a bad thought, but this is harmonic dud in every aspect. Every aspect. Like let's say we started today. Okay, here we started the session at 12, right here, looking for like a 3-bar breakout right here, and there was no follow through. That's all right. Could have even tried again there, but as soon as you break these 1-bar moves, that's it. Now you're 16. Talk to me at 3,800. Talk to me now at 3,800 bar over bar. That's what's happening. Super serial is exactly right, and it literally is like that. It gets kind of Looney Tunes, but it's serial, as in SERIL, and that's something I talk about in Volume 3. If you haven't seen that, go to the Basic Members page and click on Basic Members page. Click on Volume 3, folks. I talk about the serial move. It's an easy. It's not difficult. It's just a simple way to describe the bar over bar, 1-bar continuation concept. But that's critical because that should be happening at certain points. So click on Volume 3, go there, and it's the very back. Where are you? I think it's like towards the very, like 330 or even further. Yeah. Come back to that. Maybe I can find that different spot. That's with HSI as well. But that's how we treat it. Check out Volume 3. Again, that's on Basic Members page. Thank you. Let's do a couple more. Before I jump over to crypto, because I do want to look at some of that. We'll keep an eye on this. Let's look at stuff like dollar index, folks. What's it doing at this 103 level? Several of these markets were hitting exact hop levels, HSI checkback levels, very end of the year. 103.07. Okay, it was almost hit. We hit 103.14 last week. Okay, Friday. That's almost exact with the hop level. I would love to see that actually get hit, kind of like ring the bell, if you will. But something I've been looking at this for a while on dollar index, because if the markets are going to roll over, dollar index is going to have to move, and you do have a bullish pattern here. Wouldn't be surprised, at least even in the short term, to see like a target 1 reaction. Could explain what's going on. I mean, why the market's down, dollar looks up today, trying to do a 3-bar breakout above 104.30. And also, look, when did the dollar peak out? Very end of September, early October, which is when, the little micro rally began. So it stabilized for most of December. A little counter trend bounce to begin the year. Yeah, could be likely. And this matches up with the big interest rate chart, which I still say has to be monitored. Here you go. Let me go over here. Let's go the 2-year and the 10-year. So we've been looking at the 10-year because that has the most harmonic stuff on it. That's got, listen, that's got your daily bat pattern. Type 1 bat. That hit 389. Oh, it did hit. It hit. They must have updated that. It must have hit. I didn't think that hit properly. 3.905. So this is interesting where you're showing bullish bat in the dollar index, interest rates, and this is a rate chart showing us a target 1 completion, that reaction off the bat pattern. That's it. Kind of funny that, what did rates just roll over? No, rates have been up this morning. In the pre-market, it got sold, I guess. Yeah, okay. So this is the big deal, though. I mean, that's a type 1 reaction that is over now into the return already. But 365 is lower where what a rate's going to come off. That's the larger event. For us, looking at that bat pattern at a very high level, it links up with the other big pattern we've been talking about, which is a bearish bat on the weekly. Okay, take a look at, get a little perspective. So what's going on here with rates? And this is probably the more, I know everyone's looking at the 2-year because it's inverted, but I think this got more structure to it, more signals, gives us more concrete levels that if we're on the top side, just think harmonic pattern, okay? Because everyone's saying rates are going higher, rates are going higher. All right, let's put the pattern on. If the pattern's telling us that 366 on the weekly time frame is the hop level, harmonic optimal price on the bearish side, we do have confirmation that came in really back in December, looks like that. So what's the rate story? For now, at least pausing, and I would treat it as, best case scenario, this isn't a pause against this pattern. The daily time frame, that's actually fairly bearish short term for rates. That should retest this pattern, that should retest the bat pattern before it does anything else. 365 minimum, maybe back to 345, and if it would to then go. So that's a little divergent situation versus the dollar index, which is wanting to rally and at least go up from here in the short term. Keep an eye on that chart. I mean, that and then the other thing is, look, for us, the undeniable long-term chart on the 2-year, which is what everyone is looking at, all right, hit this 1618. No one's looking at the 1618. We're the only ones really that are looking. There aren't too many people looking at the 2-year chart, the 2-year yield chart, but certainly not many people, probably no one is even aware of the fact that this is a 1618 extension, which is critical. That's a 1618 from the 2018 down to the 2020 COVID low. That's exact, and it reversed exactly on the week, the day it hit the 1618. So what does that mean? Structurally, the fact that you could have a 382 pullback is still valid here. I mean, it's tough to see it, and maybe the fact that we've seen a bullish HSI on the weekly, and you've got some intermediate patterns here where maybe this is just going to take more time, but certainly this is a big deal. Bigger deal than I've even been thinking about in recent weeks. So I want to share that with everybody because the fact that if we're at a 1618 and we know that that's probably the most important measurement on this chart, and we see continuation off of that, well, you shoot the gap. You assume a minimum reaction, which is a major move in rates. Your 440 is this early stages of a reversal lower down to 3%? That's the thought. That things have to happen, but that's kind of the thought. That's why I'm not, I'm in a real close wait and see kind of day to day, week to week monitoring situation of this market. But that's huge, and no one's looking at it. Keep an eye on that 1618 on the 2-year yield, especially because it's inverted. There you go. Let's jump quickly over to things like crude oil and gold. Let's start with gold really quick. That's an easy one. And we do have patterns there. Gold futures chart. First, go to the daily. Okay, it's look, you have a few things, but most importantly, it's this bat pattern. Let me highlight this. Just the bat. I'm going to remove the ABCD like this. Remove ABCD. Just take that off. Okay. Listen, we're right at, this is why gold is so critical. Wanted to bring this up. We haven't looked at gold much, but here you are exactly at a target one at 1841.60. You just hit it today. HSI, that's the next signal I'd be looking for, but structurally critical that we hit this. So really somewhere in this area, probably in the next couple of days, could be by Friday, could be next week. I expect a little follow through to the upside. Then the reaction's over. This is it's kind of a delayed look. This is how it shaped up. Type 1 off of that first move. You didn't get to target 1, but it was a nice reaction. And it was a bat pattern off of that August 21 low. Pretty nice spot. Also look at, this is from September. Here's gold. And this is the perfect confirmation. I mean, this is the kind of thing I want to feature almost exclusively going forward for real setups, things that are going to be like right where you need to see them. Check it out. It's just, they're forming the same kind of combinations of pattern completion. Then you get the HSI, you get whatever your trigger is, you get the bullish HSI pattern, bullish HSI. Okay, then it checks back. And why is that check back is so important? Because you have to retest that inflection point. And then it gives you 1 and 2 green candles. So from essentially that second candle, from literally, think of it this way, from the close of that second candle to the right, you're already thinking target 1. You're thinking there. And you use the close. Okay, use the close of that second candle, 1710 area. Your HSI check back, same deal, around 1705. So clearly 1700, 1710 is the real go time area on 1 or 2 bars, or wait for a 3-bar breakout, which happened 2 bars later. And then you didn't get to target 1, but you got a nice move. And look, even the HSI check back, that first one, did the same thing. You got a great reaction. You hit the counter HSI before target 1. And even if you stayed in a bit longer, you checked back, red candle, you're done. Now we're back down here. Here we go. Come on back. So we're all the way back. We had that hop level test at 1620. Real sloppy though. But now you're back at target one. Structurally, you're very close to ending that move. And it would still be a reaction. I would say, 1850, maybe 1900, and then probably later this year you come back to retest that zone around 1700. I don't think gold, I said this last week, gold's not going to do much until it can really resolve these zones. Look at the weekly or monthly. It's real obvious. 1650 on the low side, 2050, 2068 with that crab pattern. And we could go back. I mean, maybe longer term, we make another run to retest that crab, but not until we do more work down at that 1650, 1700 level, something like that. So, and that would also help with kind of fall in line with the dollar, fall in line with what we're seeing with rates and the dollar. Let's monitor it. But target one for gold hitting right now. So let's go to crude, CL futures. Really interesting bat pattern at 70. This is the NYMEX light crude futures chart. There's several different crude oil vehicles and spot prices you can check. I recommend looking at many of them. But the big thing we've really been talking about is this weekly or even monthly 382 eventual retracement, which for the year, folks, that's $65. That's something I talked about a long time ago. Really, when crude oil didn't break out above 125, 130, and started rolling over, I said the possibility of this being an all-time 382 retracement was likely because of the prior test. So that's a 382, but take a look. All time, do we have enough data here? Yes. So all time, check it out. The front futures continuous contract, that's what this is. Yes, it went to negative 40. Most of you know that, but regardless if it went to negative 40 or negative 4,000, proportionally, this did a perfect 886. I mean, it was nuts. Like there at 125. And so since then, we were rationalizing, say, hey, if that's an 886, then shouldn't it go through a minimum 382 reactive phase before if it does something larger? That was something for a long time I kind of wondered in the back of my mind if that was what needed to happen, because a lot of people are saying crude oil is going to go to $200 a barrel eventually. Structurally, long term, monthly chart, we still need to look at M's and W's. And for crude oil to do something like that, the big move this year would go to 65. And as soon as that hits 65, I would be looking at every crude oil market, stock, see where they are, because if this is going to do this, like if this is, and I'm talking like a 3 to 5 year outlook. All right, because a lot of people are saying there's going to be crude delivery shortages and it's going to be uneven depending on where you live on the planet, quite frankly. And it would do something like this structurally, long-term harmonic stuff. Because your B point, it's like the giveaway. Because that was such a clear 886 and we get rejected in firm fashion. Look, C point for the year to 65 and then you go. That would be the big move. That could be a potentially just critical continuation within the multi-year uptrend, which is where you are. Right now on the weekly, bat pattern at the 886, it's $70. That's what you're reacting off of. And we see it in a couple other vehicles like what's the UK oil? Brent crude. There you go. Thank you. Brent crude on the daily. Had a bat down here. There you go. Gartley. Printing a Gartley. Ugly Gartley, but printing a Gartley. The only problem with this, all right, that you have a counter HSI. Perfect definition, folks. Beautiful pattern, confirmation, but look, oh, I run into an HSI bearish. What's that tell you? Likely going to have to come back and retest lower support. Also, look, hop level on this one's at 66. That would be the kind of thing to look for early this year. Wash it out, flush it, and then go. And HSI is nowhere to be found here on the weekly yet. But look at the all-time chart. So monthly chart. This is just amazing. Monthly is almost oversold, which I find is pretty interesting, but same type of deal. You hit the 886 perfectly on Brent. A couple of amazing patterns, by the way, long term. But it looks like this. Okay. Oh, we did get there. Look, 382 did hit. So you're at the 382 level on Brent already. Maybe come back to the 50 or 61. I'm looking down here. I'm pretty happy with, you know, a nice pullback, not more than a 50%. That would throw off your eventual. If you're looking for this to be a sharp long-term correction, and you're looking for the next leg off of that 886, or even, hey, even an 886 retest, come back and retest these highs in some kind of crisis situation. It would look like that, but still lower. What's going on? Mitch Ray is in the house. Welcome, Mitch Ray. I've been riffing here on our new 2-day-a-week schedule, so I'm going till probably 1:30. Welcome. Everybody give Mitch Ray a shout out, our new Miami local. Man, we got to get together and do something live. We're getting better over here at my place. Feeling a little bit better, the crew is, so let me know how you're doing. We'll talk soon. ARC looked good today. Mitch is saying ARC. I didn't look at ARC. I didn't look at those innovations. I'll circle back with those in a minute. Yeah, S&P is sitting right on the hop level at 22. It tried to flush it down to 3,800. We'll come back to that in a second. Let me do one other one. So let's do nat gas. What the hell happened to nat gas, right? It never gave us the days. It never gave it straight down on the check back, and we never got. There's the shark. We never got 2 days on nat gas. People were asking me, what's going on with nat gas? Folks, this is exactly why that waiting for the 2 bars, 2 days, there was the check back. And we talked about the fact that, hey, 466 is probably the new support, not 6, but 466. We have not had one green candle. That's the problem with nat gas right now. The other thing about natural gas, if you don't know, maybe some of the European people in here could attest to it. Apparently, your winter has become summer. Apparently, Europe is having record warm prices exactly at the time they needed it. Supposed to be, you know, low on winter fuel because of the war. Well, amazing, you know, score one for global warming, okay? Because they definitely, you know, that's why nat gas and oil prices are collapsing, because the winter of wreck that they predicted was definitely the all-time, you know, breaking records, 50, 60 degrees on New Year's Day was insane. That's what's happening. From a harmonic perspective, we've been looking at 467 hop level. We've been looking at that check back point as high as 567. We have not had one green day. In fact, this thing is down 10 straight sessions from there, and down 12 out of the last 14. So big shout out for global warming, right? Just when you needed it. Amen. Amen. Because hey, didn't we kind of got off topic a week or two about that, about certain people having to make the decision between heating and eating. It's a hard way to go. The obvious level on that gas, well, I mean, we need two candles, but hey, there's a bat pattern. 384. Even with that, and that's the static support level here, I would still, you need two bullish days before you even consider that type 2 entry. It's much like, don't want to jump around too much, but it's much like the VIX chart. VIX is popping today with a bullish candle. We haven't seen too many bullish candles, but this is why. And this is, again, remember this in November? We were looking for, we had a couple patterns around 22 or 23, and then as low as like 19 on the VIX. We're looking at basically this range. Well, we got the check back, but one green candle, second green candle didn't come all the way in until 22. It dipped under 20. But that's the first point to even start looking at it. And that, again, that delayed development, waiting for the second candle. Now, all right, today trying to do a 3-bar breakout on VIX, but still shows you that, look, waiting for that second candle, no matter what, is a heck of a lot better than jumping in. I really feel like that's saved, especially in these kind of extreme situations, That cereal, folks, talk about cereal. Serial, S-E-R-I-A-L, meaning, over bar, continuation, lower highs, lower lows, really no gyration in it. Lower high, lower low, lower low, lower low, just like that. And definitive points where that unfolds. I still say 2780 for the VIX off of this pattern is likely. That's wouldn't be a surprise, and you'd still be kind of in a normal market environment. Go up to 2780, 28, then come back, and then launch. I would want the type 1, type 2. So maybe we do something like that over the next month or two for VIX. With the big move that everyone's looking for in VIX, everyone is hoping for a 40 test. Just because historically that's been the point where you see a lot of market bottoms. We have a real nice shark pattern up here. So that, again, for 2023, that's something to consider. That kind of 1-2 scenario. Yeah, thank you, David. 185, page 185 in the book. Thank you. Where is that? Oh, there's our disclaimer. Good. 185. Right there. It's on the basic members page, everybody. So go click basic members and then just click the book, which is, sorry, number 2, right in front of me. Click there. And then David, thank you, David, 185. So here's the illustration. This will help. Oh, dang it. Hold on. Two, three, four, five. There you go. Yep. So it looks like this. That is the breakdown. 185. There you go. Thank you. Appreciate that. Yeah. Doing this. And this can be off of a pivot point. This could be off of, any kind of HSI checkback point. But it's this kind of obvious continuation. You hit something, you trigger off of it, and then once you get into that development by bar 3, bar 5, you do that. That's when you make a solid move. You've run 7, 8, maybe 10 bars off of that looks like that. I mean, that's just a classic example. That's actually a type 1 serial move, which is not too common, but they're obvious. When they get going, they don't look back. So that, take a look at that. Here's the bearish. This is what we should be looking for, really. If S&P and NASDAQ break down under 3,800 and under 10,000, 10,005, you're going to see that. Looks like, just a straight off move. Once you complete it, you straight to target. Take a look. That's Harmonic Trading Volume 3, everyone. Anyway, let's come back to it. Let's wrap this up. VIX, not so bad. I mean, 5-minute VIX even, take a look. There you go for the day, just continuing higher. And I would look at these the same way. It doesn't matter, on a 5-minute chart for VIX, I'm looking at that in terms of market direction the same way I would if it's just the underlying instrument. There's a bat pattern, really nice, 2152. That triggered what was it Thursday or Friday? Friday. And then look, your last 5-minute HSI, bullish. So that continues until for intraday purposes, whereas HSI is nowhere to be found. So, I consider volatility to rise throughout the session until we can register, maybe go to new highs for this session here. Meanwhile, you're sitting S&Ps at 3822 and you're doing nothing. Can't get off. Not at all. Super. Let's stay on top of that. Here's one other crude oil instrument. Let me circle back to this USO. All right, look, the last signal on USO, and this is also something that just registered last week and checked back, is really nice daily HSI at $69. I think that's going to stop that little rally for now, and USO is going to come back into this rather important zone. Look, it's a big bat pattern. You just completed that terminal bar right here, 62.62, but just a reaction. So crude oil looks like it wants to come down early in the year. And again, USO at 62 or lower before I would think of it, really consider it on the long side. And that's what we want to see. Crude oil to come in early in the year and really get hit. That would set up an opportunity, but it's lower. It's lower. One or two more on this energy sector thing, because we have been in front of this for a while. Look, ExxonMobil, this is distribution. And that monthly, this was great too. The monthly, check it out. Perfect stuff, right? HSI on a monthly. This is ExxonMobil. It completed in June. We started talking about this, and in this summer, it was reaching some overextended levels. Checked back in October. Now, it completed one, and the second bearish candle just last week, following through. Listen, any monthly close under 102 or worse, sets that whole thing off. That is a peak, that's a top. And you're looking for this to come back, what's it, 80 or 65? 76. There's your weekly deep crab, folks. It's beautiful on a monthly, weekly. I wish I had perfect confirmation. You don't, but I'm looking at that 114 hop. That's got to be it. And you're in a type 1 move. What's Tesla doing? Adam's saying Tesla's getting crushed. Let's see. Okay, that's enough. Well, that's the deal on energy. Okay, we know the deal on energy. And it's going to be an opportunity, but lower levels. Tesla is, okay, great. Tesla's getting destroyed. Here's your 5-minute. New low of the day. What's that down what now? 18. So massive engulfing. Look. So I think we can say it failed. No confirmation. Structurally, that's failed. Seriously flawed. And you're deeply oversold now. The problem with where Tesla is, not only the 100 psychological level, which I think everyone, I wonder what those puts are going for now. The 100 puts are probably, people are loading up on those. Let me see here. Because those were not, here we go. Yeah, even the 101s are like, they're like $2 for the 100 put. That's amazing for that expire, what, today? No, on Friday. On Friday. And it's probably one of the few to really watch. If this is going to fail, what about Apple? What about Apple? Yeah, on the 5 minute here, it's yeah, the whole day been down. Yeah, that's an issue, folks. Again, you're not, even for today, there's nothing there that would say take a whack at that on the long side. Your clear breakdown, and the shark, you have these 5 minute patterns have been pretty disastrous. You know, there was the shark goes to a 5-0 type 2 shark. Boy, I don't think we're going to see 130 for a long time. If anything, look, go to your weekly here. And look at the last HSI. What can we grab off of? What can we look out of? The last couple of HSI signals are all failed. Like this is my concern with Apple, because you have 1 and 2 and 3 bullish readings trying to create some support up here. That's failed, and that really failed. I would say this morning you're officially wiped it out. You could even say last week. But the fact that these high levels of HSI signals, you've taken them out, even if you're going to look at that around 119 on Apple, that's 5 lower, and that would be minimum. Again, I think by Friday on this, with the way this is shaping up already, let's take a look. What's your 5 minute look like? Not close anywhere on hitting even oversold yet. Really quick, I wanted to scroll back here. I'm not seeing anything at the moment to jump on. I do want to highlight one or two of the innovation things that, much like nat gas, a lot of these that are type 2, here's Airbnb, they either haven't triggered or they need to give you 2 green bars. Airbnb is almost at the hop level at 80.74, no confirmation. Let me go 1 or 2 more here. Let's go to ARC. Yeah, because that pretty much sums it all up. And she's right back at $30. There you go. Kathy's down here at 30. So look, did we check? We formed an HSI, bullish. Even as crazy as the story is, let's just walk through the signals. You're at a hop level at $30. We have a bullish HSI signal that triggered at 30.24. We are at that 30.23 level right now. Right now. We're checking back. So talk to me in 2 days. We come back Thursday. If that's going to be anything, I mean, you're at all-time lows, so I'm in no rush to jump on that, but you are at a hop level. You have an HSI signal. I will look at that. I will keep my eye on that. If it fails, it'll be an obvious failure, and it goes to 10. You read my mind. Steady growth 101. Disney is this identical situation. Here's Disney. But this one does have 2 bullish candles. So look, pretty straight up. Disney, there's your check back. Bullish candle, bullish HSI check back one, and the second candle happened on Thursday. Friday you went bullish. Look, something like this, as ugly as that is, trying to do a 3-bar breakout needs to close above 88.50, 88.30 is the exact number. I would want to see a bullish candle as well, because it's a type 2. It's a perfect type 2 on the bat. All right? But plenty of time there. Give me a real decisive 1-2 candles, cuz I'd rather buy it at 89 or 90 to get back to like 106 than trying to jump on it and have it flush on me. I've been looking at that in detail. It's just not quite there yet. And even your weekly time frame, the last 6-7 weeks have been ugly on Disney. Give me a green week. Give me 1 week. That's why we have to wait. Have to be patient on these. A lot of them are in a really nice spot. I just think that we can wait. They're down this much. You know, you give up $2-3 on the upside to let it show itself. Disney, I mean, all-time high at like 190, 200 is now 88. I'll wait for 91, $92. It'll show signs of life at that point. These are not signs of life here, but I'm looking at that. I didn't even look at the Dow Diamonds, folks, or the industrials. They look like this. So before I jump to crypto, look, all of the markets, S&P, NASDAQ, they're at different spots, but they're all in a consolidation zone of the last few weeks like this. The Dow is in a lot relatively better spot than NASDAQ for sure, but it makes the decision easy. So we break down, we close under these lows. You go to new lows for the year, expect the flush, expect a little bit of an 886 minimum retest of support like this. Even in the Dow, and we have an HSI check back, 290, basically back under 30,000 for the Dow. If we start to roll over, close under these lows, you're really indecision candle, but highlight it this way. So for the diamonds, if you were looking for signs of bullishness, they're not there, because we had the trigger at 343 on the diamonds. Then you have one, and today's your second bearish candle. So look for the close. Again, today's close, critical. The open was what, 332, you're 329. You'd have to rally back. We'd need to see something spectacular by the close. Are we trying to rally off the hop, chat? 38.22. We're back there one more time. Is that trying to, let me go to that really quick, and then I'm going to wrap up with crypto. Let's see. Here's 30-second S&P. What about the 5-minute? 5-minute S&P. So here's the big crab pattern. All right. Okay, here's another shot. Let everyone know. This is another spot right here where, okay, we're back in the zone. We still don't have HSI confirmation, so it's not ideal. HSI came all the way back there, but what's going on right here on the 5-minute basis? A 3-bar. Okay. Looks like it's more like a 5-bar, but that's okay. You are still trying to get out of that zone. 38.60 at target 1. You're 38.30. No confirmation, and I would want to see that continue higher. What is a way to maybe get in on this opportunity? Let's say, okay, I just showed up at my screen and I'm a little bit past 38.22. This is where bringing in the 30-second chart. Show me what's on a 30-second chart, and I'll show you where the opportunity can be. Because within that whole zone, we know 38. This has been 38.22 on the 30-second chart all morning. Okay, like right there. Not even a lot showing. You know, a little something down here at around what, 17. But you have a bearish trigger right here, right now. So I'm not doing anything. I think that's something that helps people understand. Like if you're not right in the exact position you need to be, this is for day trading in particular. Okay, you need to be patient with it. I'm looking for maybe a 30-second pullback or drawdown here. Give me another secondary HSI signal on the 30-second chart to be some kind of trigger, secondary trigger, down there and then go. So 5 minute, all right, you spent the last hour and a half since we've been talking at that 22 number. There you go. There's the 5 minute. But it's a nice pattern. It doesn't have any confirmation where we want to see it at the hop level. So my expectations are just reduced. If I want to take a shot on, like I said, the 30-second chart, it's probably going to come back and retest. Give it a little time. But at best, it's a reaction trade. That's it. You're looking for a reaction off of that move. I think for tomorrow, it's pretty clear that that pattern fails. Then we start the fireworks. You know, you start really flushing. And 3,800 is the long-term level on that. So we'll do more of that on Thursday. Listen, crypto, really quick. Crypto top 5, and let's do it that way. Continue to do it that way. Start with the top 5 on crypto. Ethereum. We start the year. At least we didn't go to new lows since November. Okay, weekly time frame. Trying to hold the 1200, 1225. It's this. It doesn't change. It's still the Gartley. It's still this Gartley, but there's no sign. There's no HSI in here. You had HSI back there in November, but no follow through. This is a clear scratch scenario. I don't care if it does go to target 2 eventually. How many bars? Okay, so far 57 bars. I can go to 30 bars and say, all right, I've given that enough time. So I still say you want target hop levels on all your patterns. And I'd rather miss out than try to get something not at the hop. Number 2, BNB. Still looking for opportunities for that to kind of hit resistance and go lower. I mean, look what's happened. Nothing has happened on BNB, which is supposed to be so solvent, so many reserves. You know, I mean, nothing. It's the 228 level, folks, still off of this bat. Nothing has changed on Binance Coin, BNB. Okay, you have an HSI arrow on that is daily, and this is Binance US. Okay, take a look. Right there. Links up with this indicator. But no follow through. Another situation where 30 bars. Just like Ethereum price action, you know, with this kind of a thing here, we'll go 30 bars. You can sit in this for BNB until January 18. January 18. So I think, you know, for people looking for opportunity in crypto, it's probably 2 months out. And don't be surprised if it takes 2 more months of just crypto winter before you even see anything. A couple more, of course, Bitcoin, 16,000, nothing. 16.5. I mean, there's nothing there. There's nothing. Zero. I don't even think Bitcoin is tradable. Go to the 4-hour charts. I mean, this isn't look. It's an instrument. Here's an instrument that's priced at 16,000 with a Gartley at 16,431, and it can barely rally 200 bucks. And there's a perfect example on a 4-hour chart, type 1 on for Bitcoin, with the Gartley now having bearish HSI. So this is back down, and the fact that it's not even trading in a sizable range tells you, that's not an opportunity. I mean, there's nothing there for you. So look for Bitcoin to retest 16,000. For the year, folks, I'm going to say this. I do expect us to hit the big number at 11,000 this year. And I think it will happen probably by April. And this is the only argument I want to have with anybody about Bitcoin in general is talk to me at the COVID 886. That's 11.6, 11.8. Talk to me then. That's 30, 40% lower from current prices. Let's get to number 4, Doge. Now, isn't this interesting? Doge, it's like 7 cents, 7.1 cent, as low as like 6.5 cents. We've got some things here. It's trying to hold, a little bounce. There you go. A couple of patterns. 4-hour chart. You're basically retesting the shark pattern, and we talked about that. Or sorry, the bat pattern. That was around 7.5 cents. Hop level around 6.5. That's what you are. But same deal. This is going to take a while. Doge will probably come in here this week and get back down to 6.3, 6.5, and give you another little HSI. That's it. Not much, but, trying to hold. I don't know. You do need to hold 7 cents, though. Question, why would anyone accumulate when volatility is dying? Yeah, that's mega bad, and you can buy way lower. I think that's it. I just think, look, I'm a firm believer that all markets, okay, it's a combination of markets, you being ready to trade, and then the markets ready to be traded. And that's how it has to come together. Both of those have to be in the right spot. You need to be ready to trade, and the market needs to be ready to be traded. The crypto is not ready to be traded. In fact, you're still washing out, look, for Doge, you're trying to crack this all-time downtrend, but you could go into a sideways range just like you did back here. You go sideways range. That's just a daily for 60 days. Why not do that again and go into a 60-day range from the breakout point before that's another opportunity? And again, that's like March. Yeah, I think time-wise, look, a lot of these are setting up, but they're still time-wise and even a little price-wise, they have work to do. The number 5, XRP, look, that bounced off the 32 level. We were saying, could go as low as 27. And it's got patterns, it's got levels, and even some instance it's got confirmation. And that's all at around 32. And, if you're into XRP or you believe in it, I mean, a lot of people are looking for a settlement on that thing. So be it. But much like the rest of them, look, get to the right of that kind of downtrend for XRP. And until you do, you're don't be surprised to be contained, no breakout. I mean, you're not going to get anything to explode. So I think the whole concern of missing out on something is not, it's not even valid until you're to the right. Again, February, March, April is where that kind of shapes up. Let's quickly go back to Solana. It's, probably a one-off. Yeah, the daily. Yes, you had a daily HSI signal. But this is just, come on. It's a one bar thing. It's the first bullish HSI signal since the last one. And what is it? There you go. I wouldn't be surprised to see this go. Yep. I was just going to say, hit the HSI on the bearish side. So look for this tomorrow to actually register a bearish HSI off of that little pop. I think this will end by tonight, and you probably come back down, under 12. Easy. You're gonna register that, and this whole move that really happened within 2 days, okay, is about over. It's exhausted. It went from oversold to overbought in a very short period of time, and that's how exhaustive moves really do get generated. That's just a reaction there. Evan's saying he thinks the bottom in XRP is in, and you'll get off the lows. The opportunity will slip away. I don't think so. Look, maybe, Evan. I don't disagree that, hey, these are all oversold, and if you know something about crypto, maybe these are opportunities. I just think, like the major markets, I'd rather, like Disney or like Google, let them pop a couple of bucks rather than trying to catch the knife. Because none of these rallies are getting sustained. And that's typical late stage bear market behavior. Pop up, roll down, sell it for a negative close by the end of the day. So that's, to me, it just continues until you get through probably another 2 months. Quick, total, since it's the new year, total crypto market cap. And this is similar. Shark pattern, your total, including Ethereum, including Bitcoin, has a hop level at 649 billion. And like all these long-term patterns, I'm going to use that as the target. It definitely helps that we've done nothing since November. And this little shark pattern off of last year gives us something, but it's lower. It gives you some levels to look at, but they're 10 to 20% lower minimum. And I'm not going to do anything until that hits and those register. And there's no overbought signal down here. Really, you had this overbought signal in HSI way back in November, and you've gone sideways, but you've done nothing off of that. So again, crypto, we're going to monitor it. I'm not going to say, I'm not going to completely ignore it, but things have to happen there to get cheap. I mean, now go get cheap. Last year, 2022 was all about destruction. Now get truly oversold, completely do the washout. And here's total crypto. Where are you relative to the 886 so far? Are you there yet? It's like this. COVID low, 2020 like that, and this is a pattern we're seeing in all of these charts, which makes sense. Look, if COVID was just a fake cycle, so be it. But your 886, that 418 billion. Okay, 420 billion. I know. 886. Yeah. Look, I hear you. And again, the euro, like Carthago, I hear you. A lot of hopium. TLT, euro, yen, strength, all of this in the face of what people would like to see, which is not happening. There's a lot of things, counter trend things that are developing that people want, that people are seeing at a point where they want it to turn around. It's just not there. It's not there. I still come back to the 2018 example for crypto. Okay, that you are on the downside of that correction, from this kind of a move, And the two things to be looking for in crypto for 2023 is the violation of the clear downtrend, okay, and then 6-8 weeks of stabilization. That's a thing to look for crypto. And when you get it, you're still early. You're still early. You're on the underside here, and I'm more inclined to say you're like here on a relative basis, and you need to do that last move down. Get to 886, the 2-3 year cycle 886. It might not be a perfect like all time if I go like that. Yeah, it is. It's perfect. Just give me the 886, please. And then I promise I'll be all over crypto again. I'll be probably the first one with the patterns once we get there. But we're not there. Couple of more, folks. So I wanted to go long today. This is the new format. You guys can skip through, however you want to go through these. But I do want to get into both long-term, short-term situations. Here's the short-term situation we started with today, the S&P, and nada. 38.22. Okay, didn't fail yet. No continuation. You have a close. But you need to continue. This is something I think is, here's the level. Okay, treat that as like a terminal bar. We're looking for that to flush down to 3,800. Okay, but did not continue. Use the single bar. I mean, even on a move like that, that should be serial. All right, where if you're looking to try to short it, I know a couple of you tried to short that, that's your stop. Okay, it's where it should do something. What's HSI is nowhere to be found. Nada. What about someone, before I go, someone said on the hourly we had an HSI signal. I don't know. I did want to show, look, we had a type 2 ABCD that this is what's going on up here on S&P futures was 3,900. Let me go to the TradingView platform. Let's go back here. Let's go to SPY. Sorry. So 39.22 on SPY still, all right. I don't have any confirmation, so I'm not that enthralled about it, but there you go. Here's the SPY deal before I go to the 5-minute. This is the thing on the SPY specifically that didn't form on other instruments, but it's there. And this is why this range that we're looking at is so critical. Under 3,800, and on the SPY, it's basically 380 or 379, is we are in a type 2 return technically. We had a deep crab, 357 on the SPY that hit target 1 at 404, total rejection, where we would need to come back down. This is like Tesla, it's like Microsoft, it's like Apple. They hit their target 1 and they have to come back and retest. So that's why today, tomorrow, you fail, you close under these lows, you do shoot that gap. And that's 357. Matches up with what we said on the index, which is like 3,600, 3,580. That's where we are. It stinks. Tesla's down, what, 18 now? 15? So I expect it to happen quickly, like tomorrow and Thursday. We'll have our jaws open by Thursday because there's Tesla. And why not finish with the Qs? Because we know they have the same deal on your TradingView platform. Okay, check out the patterns getting generated on the daily. This is daily. We've been in a full return phase on the Qs on this butterfly. Okay, and the thing that happened, it was amazing, really, at the end of the year, last session, last day of the year, is there's your second green candle. All right, there's HSI coming a little bit above where we want to see in the zone, but we're down in the zone, hop level at 256, 86 off the butterfly. So, It's a retest of the October low. Type 1, bang, we're back type 2. This is where, with that second bullish candle, looking at today would literally be the first day you looking for opportunity on Qs. You could have even jumped in on the open and been terribly wrong, but today's really the first day of what should be happening. This should be going up from here. It's not. Okay, and it is a perfect, I will say it, it's perfect confirmation. I wish HSI maybe was a little bit lower, but I've got to call that for what it is. And that just happened with Friday's close. So if we see this thing fall apart, you get a close under, say, 261, you know this thing's in a larger, more trouble. Okay, that's the problem I have with the immediate support point. And I think of all those patterns, S&P is probably, the one to watch at the immediate 38.22. Here's this is this morning Qs, was a bat pattern on a 5-minute basis. A lot going on, folks. I'm more concerned about tomorrow than even today. But I think I've laid out the levels pretty clear. I don't like what Apple's doing. I don't expect it. Better way to say it is I don't expect Apple to turn around. I don't think Tesla's turning around. All right, they're going to gang up on it. There's nothing there to go in on that opportunity yet. So you're a few days away, and I would treat it like that. Just be patient on this market because I think it'll flush and it can give you some real opportunities, but on these retests, lower levels, lower prices. All right, that's what I have for today, folks. Look, come back Thursday, first person to come in and type in, let's change it up, okay? First person to type in HSI on Thursday. We'll give you away a book, and then we'll go 1-2. First person gets a book, second person gets a gold membership, and then we'll give a couple more away during that session. But we'll do more of the longer format, Tuesdays, Thursdays, 12 noon to basically 1:30 or even 2. Let's see if we get an opportunity, and we'll run with it. Like I was hoping this would be an opportunity for us today. I was hoping we would get this 5-minute to develop into something, and it didn't. There you go. There you go. All right. Well, actually, maybe it is. It's just taking its time. Look, the reason why I didn't take this trade is because there's no confirmation at the hop level. And maybe going through these and showing you what really validates a long opportunity for me is probably highlights or filters out the bad opportunities. And just finish up on this because this is where we started. We are about to get a 5-minute bearish signal, which is a warning sign. Again, you're doing nothing. This is early stages, harmonic dud, more than 30 bars. Now we're going to get a counter trend HSI. We'll come back on Thursday. We'll look at this again. Thanks, everybody. We'll see you on Thursday, 12 noon. You have any questions, get on the Discord, get with the trial, basic membership, and you know what to do. All right. Have a great one. Go get them. See you Thursday.